The UK government wants you, the British saver, to invest your cash in the stock market, not just save it. This is a major campaign. Investing in British companies is good for you and the country. The goal? To turn savers into investors and fuel the UK's economic growth. But what's in it for you? The Chancellor's perspective is central to understanding this new investment drive. From his viewpoint in number 11 Downing Street, the economic landscape looks challenging. The UK, like many countries, is facing sluggish growth. It needs a powerful stimulus to get the economy moving again. Traditional methods, like cutting interest rates or government spending, have their limits. So, the government is looking for creative solutions. They see the vast sums of money in personal savings accounts, not just as individual wealth, but as a national resource. A resource that is currently underutilised, sitting relatively idle when it could be funding the next generation of British success stories. The timing of this push in 2025 is no accident. After years of economic uncertainty, the government wants to project an image of confidence and forward momentum. They need to show that the UK is open for business and that it is a vibrant place to invest. By encouraging its own citizens to invest at home, the government sends a powerful signal to international markets. It says, "We believe in our own economy, and so should you." This domestic vote of confidence can help attract foreign investment, which is crucial for large-scale projects and for strengthening the value of the pound. The Chancellor's plan is therefore a two-pronged strategy to mobilise domestic capital and to boost international appeal simultaneously. Furthermore, there is a desire to reduce the UK market's reliance on foreign ownership. Over the years, many iconic British companies have been bought by overseas investors. While this is a normal part of a global economy, there is a growing political feeling that more of Britain's key assets should be owned by the British people. The Chancellor's initiative is partly a response to this sentiment. Encouraging a new wave of domestic retail investors, that is, ordinary people buying shares, is seen as a way to renationalise British industry in a modern capitalist way. It is about creating a shareholder democracy where the profits and successes of British companies are shared more widely among the population. Finally, the government is looking at the long-term financial health of its citizens. With an ageing population and increasing pressure on the state pension system, there is a need to encourage greater self-reliance for retirement. Relying solely on a state pension and cash savings may not be enough to ensure a comfortable future for many. By nudging people towards investing, the government hopes individuals can grow their wealth more substantially over the long term. This would lessen the future burden on the state and empower people to take greater control of their financial destiny. The push is framed as an act of responsible financial planning for both the individual and the nation. In the 1980s, the UK government urged ordinary people to buy shares. Launching the famous Tell Sid campaign, millions became shareholders overnight, but many sold quickly for profit. The lesson: creating lasting investment culture takes more than a quick campaign. It needs education and support. The Chancellor's 2025 plan aims to awaken billions in dormant savings, moving them from bank accounts into investments that fuel British businesses and growth. The goal? To create a self-sufficient, resilient economy built by British people for British people. It's about shared ownership, empowering everyone to have a stake in the nation's future. The Chancellor's 2025 investment plan is about more than money. It's about building a stronger investment culture in the UK. The goal? Make investing as normal as saving, boost financial literacy, and help everyone share in the nation's success. It's a vision for a more connected, prosperous Britain, where everyone has a stake in the future. The Chancellor's plan is a long-term project to transform the UK into a nation of owners, not just borrowers or savers. The goal is to make investing a regular habit, empowering people to build wealth and secure their futures. If successful, this vision could define the UK's identity and prosperity for generations. In the 1980s, the UK government launched a revolution in share ownership, selling state companies like British Gas and British Telecom to the public. The famous Tell Sid campaign encouraged millions of ordinary people to buy shares for the first time. Suddenly, owning a piece of Britain's future was for everyone, sparking excitement and a new era of popular capitalism. The 1980s privatisation boom brought millions into the stock market, but most cashed out quickly, treating shares as a one-off windfall. The dream of a lasting shareholder democracy faded as ownership shifted back to big institutions. The lesson: without ongoing education and support, investment revolutions can be short-lived. The government remembers the lessons of the Tell Sid era. Lasting change needs more than a catchy slogan. This time, financial education and honest messaging about risk are central. The new initiative encourages investing across the whole UK economy, not just a few big companies. And with modern apps, investing is easier and more accessible than ever before. Moving your money from savings to investments offers the chance for real growth. Savings accounts are safe but grow slowly, often losing out to inflation. Investing in companies lets your money work harder, growing over time, like planting a seed that becomes a tree. That's how many people build wealth for a better future. Dividends are a direct financial benefit of owning shares. When companies make a profit, they can pay you a dividend, real money, often twice a year. You can spend it or reinvest for compounding growth, turning your investment into a powerful wealth-building tool. As a shareholder, you're a part owner, sharing in the company's success. Inflation quietly erodes your savings, making your money buy less over time. Investing, especially in shares, can help your savings outpace inflation and protect your future spending power. Simply saving in cash risks falling behind. Investing gives you a better chance to keep up and secure the lifestyle you want. Investing offers growth, but volatility is its constant companion. The market moves in cycles, exciting rises, sharp declines. This roller coaster is normal, not a sign of failure. To succeed, understand and accept these ups and downs. Only invest what you can leave untouched for years. That's the key to long-term success. Investing in a single company is risky. If it fails, you could lose everything. History is full of once great companies that vanished. Putting all your eggs in one basket is a huge gamble. Diversification protects you. Spread your investments across many companies to reduce risk. But new investors face more than just market risks. Scams, high fees, and emotional decisions can be just as dangerous. Scammers prey on the inexperienced, while high fees quietly erode returns. And our own emotions, fear and greed, can lead to costly mistakes. Protecting yourself from these hidden dangers is just as vital as navigating the market. You've weighed the opportunities and understand the risks. Ready to start investing? Begin small and simple. Think of it like learning to swim. Start in the shallows. Invest only what you can afford to lose, allowing you to learn without risking financial security. Consider a stocks and shares ISA for tax-free growth. Use a low-cost tracker fund for instant diversification. Drip-feed investments monthly to benefit from pound-cost averaging. Before investing, clear expensive debts and build an emergency fund. This ensures you won't need to sell investments in a crisis. Starting small and with a solid foundation is key. Remember, investing is a journey, not a sprint. Keep it simple, stay informed, and grow your wealth wisely. Your financial future starts with these first steps. The golden rule of investing: diversify. Spread your money across various investments to manage risk. A single company's failure won't devastate a diversified portfolio. Use funds to achieve broad diversification easily. Diversify not just in stocks, but across asset types like bonds and property. Different assets perform differently in varying economic conditions. Adjust your asset mix as you age to balance risk and growth. Avoid betting big on a single tip. Spread your risk. Diversification ensures your investment journey is steady and secure. It's about building a resilient portfolio, not chasing quick wins. Embrace diversification for a safer investment path. Once invested, the hardest part is doing nothing. Time is your greatest ally in investing. Ignore market noise and resist the urge to tinker. Successful investors hold diversified portfolios for the long haul. Patience lets economic growth and compound returns work for you. You're not pressured like fund managers. You can afford to wait. Focus on time in the market, not timing the market. Set clear financial goals to stay the course. Check your portfolio occasionally, not daily. Investing is about mindset. You're an owner, not a trader. Patience and discipline are your keys to prosperity. Is the 2025 investment initiative a wealth opportunity or a trap? It's both. It's a calculated opportunity, not a guaranteed path to riches. The initiative encourages putting money to work for long-term growth. Investing offers a chance for financial empowerment and security. But beware of market volatility and the lure of easy money. Avoid scams, high fees, and poor advice. The initiative is a trap for those seeking quick riches. Success depends on your informed, patient approach. For the disciplined investor, it's a significant opportunity. The government provides the map. You navigate the terrain. Avoid pitfalls and stay on the path to your financial destination. Approach with knowledge and a long-term plan. The 2025 initiative places responsibility on the government and you. The government must educate and protect new investors. Honest messaging about risks and long-term commitment is crucial. Support includes financial education and scam prevention. Success is measured by long-term investor growth, not initial enthusiasm. Ultimately, responsibility lies with you, the investor. Learn the basics, understand your risk tolerance, and set goals. Be the CEO of your finances. Don't outsource decisions. Embrace a mindset shift from saver to engaged owner. Understand core principles. Solid foundation, diversification, patience. The government's initiative is an invitation. Accept it responsibly. Your financial journey is yours to navigate, with guidance along the way. The 2025 investment drive is more than policy. It's reshaping our relationship with money. It's a call for savers to secure their future, fueling growth and innovation, building personal wealth and beating inflation. Success hinges on financial literacy and honest risk assessment. A disciplined approach transforms this initiative into opportunity.